Now, Chinese central banker Pan Gongsheng unleashed one of China's most daring policy campaigns in decades. However, economists say that the adrenaline shot is only buying China a little time. Economists believe the stimulus blitz is just a down payment. They say in addition to the latest measures, China needs reforms to reconfigure the economy and unleash consumption growth fundamentally. Here's a report.
At a rare high-level press conference in Beijing on Tuesday, the governor of the People's Bank of China and other senior financial officials finally delivered the easing measures that market watchers had been hoping for weeks. This is like a huge shot of adrenaline for an economy on the verge of a deflationary spiral. Lower lending rates increased funding for banks, larger home buyers' incentives, and the possibility of a stock stabilization fund are all on the table. The mainland and Hong Kong stock markets rose sharply, with the CSI 300 index reaching its highest level since July 2020. Sectors with significant exposure to China, such as the automotive and luxury goods industries, drove advances in US and European benchmarks. According to the market's reaction to the policy blitz, the measures have brought the Chinese economy some much-needed breathing room. However, economists believe this is simply a down payment. The $18 trillion economy is facing a prolonged property market recession, deflation, and escalating global trade tensions. In addition to the massive stimulus package, President Xi Jinping will need to address these issues with more long-term structural reforms. Duncan Riley, chief China economist with Pantheon Macroeconomics, said, "I don't think it's enough to address the underlying issues behind China's movement towards deflationary spiral." Wrigley added, "What China needs is a package of reforms to fundamentally reconfigure the economy and unleash consumption growth." For the time being, the narrative around China's economy has been altered by Pan and other leaders. This is a significant change. UBS Group and Goldman Sachs Group both lowered their predictions for China's economic growth in the past few weeks. This was in response to a deluge of negative data that sounded the alarm about declining prices. Bloomberg Economics and others now expect the government to hit Xi's goal of around 5% growth this year. But most economists also agree that more is needed to avoid entrenched Japan-style deflation. Nigel Pei, a portfolio manager at Timefolio Asset Management, said, "A lot of China's issues are demand or confidence-driven." He added, "Overall, I don't think the measures can move the needle as China's problems are complex, and there's no silver bullet." With the central bank surprising the market by doing more than expected, the spotlight now is on the Ministry of Finance. More fiscal measures could come in the next few days as Xi's 24-member Politburo is set to meet ahead of a week-long annual holiday starting Tuesday. The event will mark the 75th anniversary since the Communist Party founded the People's Republic of China. For now, though, the big missing piece remains a coherent strategy to get China's 1.4 billion people to ramp up spending. Business Bureau Report, WION World is One.
For latest news, download the WION app and subscribe to our YouTube channel.